Welcome to the roller coaster ride of technical analysis, where charts are our playground and trends are our treasure maps.
I thought this was just about predicting stock prices.
Okay, but predicting stock prices is like trying to forecast the weather in a tornado. What we do here is technical analysis, or TA for short.
So what exactly is technical analysis?
Great question. Technical analysis is the art of using historical price data and trading volumes to forecast future market movements. Imagine it as reading the stock market's diary and trying to guess its mood swings.
But why do we need to analyze charts? Isn't it just guessing?
Okay. That's where philosophy comes in. TA is based on the idea that history tends to repeat itself. So, if you know how the market behaved in the past, you might get a clue about its future tantrums.
Okay, but isn't there another way to analyze stocks?
Absolutely. There's also fundamental analysis, FA. FA is like examining a car's engine to figure out how well it runs. You look at company earnings, revenue, and other financial metrics. Technical analysis, on the other hand, is like watching how fast the car is going to decide if you want to race it.
So, if TA is like watching a car race, what's the deal with being a technician or chartist?
A technician or chartist is someone who loves to study charts. They see themselves as detectives deciphering the market's secret code.
I've heard there are different theories on technical analysis. What's up with that?
Oh yes, we have theories like Dow theory, Elliott wave theory, and Fibonacci theory. Each one is like a different superhero with its own special powers for reading charts.
Speaking of charts, what are trends in TA?
Trends are the big stories in the market. We have uptrend, when prices are rising. It's like the market's on a shopping spree. Downtrend, when prices are falling. Picture the market on a diet. And sideways trend, when prices are moving in a flat direction. It's like the market's in a long, boring meeting.
What about those support and resistance levels I keep hearing about?
Okay, support is like the floor holding up the market. Resistance is the ceiling keeping it from rising. Picture your market as a trampoline. Support is where you bounce off, and resistance is where you get stuck.
What's a trend line and channel line?
Trend lines are like drawing straight lines through the highs or lows of a trend, connecting the dots, so to speak. Channel lines are parallel lines forming a channel where the price bounces up and down, like a stock's personal roller coaster track.
What's this about percentage retracements?
Percentage retracements are like measuring how far a price has fallen from its peak before it bounces back. It's like checking how many times you've been interrupted in a long meeting before getting back on track.
And what's a chart exactly?
A chart is a visual representation of price movements. We have different types: line chart, a simple line connecting closing prices. Basic, like a single line in a poem. Bar chart shows open, high, low, and close prices. It's like a detailed grocery list. And candlestick chart. Each candlestick shows price movement over a period, like a colorful comic strip of market action.
What about chart patterns and continuation patterns?
Chart patterns are shapes on charts that indicate potential future movements. Continuation patterns suggest that trends are likely to continue, like a movie trailer hinting at the sequel.
Why is volume so important?
Volume shows how many shares are being traded. High volume means high interest, like a busy concert, while low volume is like an empty theater.
What are technical indicators and what types are there?
Technical indicators are mathematical calculations based on price and volume. They help to confirm trends or signals. We have major indicators, moving averages, relative strength index, RSI, and MACD. Think of them as the top chefs in a kitchen, guiding market recipes.
So what's the takeaway from all this?
The takeaway is that technical analysis is like a toolkit for navigating the market. Whether you're drawing trend lines or analyzing candlestick patterns, it's all about getting the best clues to make informed decisions. Just remember, the market can be as unpredictable as a cat on a trampoline.
Thanks, Professor. This actually makes sense now, well, mostly.
That's the spirit. Keep studying, and soon you'll be charting your way to market success. See you next time and goodbye.